What's going on, my fellow wealth creators? Matty Ice here. Welcome to another training. We're going to answer the question, does dividend paying whole life insurance suck for building wealth? Absolutely not. It is fantastic for building wealth. But I see this a lot where people are, just bashing whole life. It's just this terrible place to put your money. And it can be if it's not set up properly. Do a 100% base policy, traditional whole life, like Dave Ramsey and Susie Orman talk about. Is it a great place to put your money? Probably not. But, usually when I hear this stuff, I want to give people the benefit of the doubt to the fact that maybe they just don't know how these policies work. But you can custom design a policy to have really high cash value in the very first year and make it really efficient over the long run. And I've done multiple videos on just like breaking down my own policy. I'll put that down in the description if you want to see how I set up my own dividend paying whole life insurance policy specifically for the infinite banking concept. You can check that out. But you can custom design these to be amazing, guys. Really, really powerful assets for helping us to build wealth. It just gives us a really strong financial foundation. And the fact that we're able to access the money inside of our policy to continue building wealth while our policy is going to continue to get that uninterrupted 3 to 5% net tax-free compound growth while we're using the money to build wealth is just incredible. It literally allows us to set up our own banking system. Now, the pushback I'll get on that sometimes is, oh, you got to pay interest in order to do that. Well, yeah, it's a small price to pay, though, to continue to get that uninterrupted compound growth. Not to mention it's safe from market crashes and volatility of the markets and all the crazy stuff going on in the economy. Like, I sleep pretty good at night knowing that I have my safe money with one of the best risk management companies in the world. Like, that's what these mutually owned life insurance companies are. They're so good at risk management. That's why they've been able to pay dividends since their inception. A lot of them have never missed a dividend payment for over 100, 150 years. Some of them. I mean, what company do you know that's listed on the stock market on the stock exchange that has always paid a dividend? Maybe there's a couple. I don't know if Coca-Cola always has, but anyways, my point is, when you're in the market, you have that upside or the volatility of the market. Not saying not to do that. My point is, though, is that it gives us a really great place to store our capital, our safe money, the money that we want to put to work, but also continue to have access to so we can build wealth with it. I want to give you a couple of examples of how I'm using it in my life to build wealth and why I think it is fantastic for building wealth. And actually, before I do that, though, I want to be clear that you're not going to get rich with a whole life insurance policy. Like, we're not setting it up just for the tax-free compound growth, even though over the long run, 30, 40, 50 years, that number can get pretty big. That's the power of uninterrupted compound growth. But we're not setting the policies up necessarily just for that. I mean, you can. If you're risk adverse like me, I don't like taking a lot of risk with things that I don't have control of or aren't backed by hard assets, things like that. 3 to 5% tax-free compound growth, that's pretty good. But that's not usually why we set the policies up. If you're looking to build wealth with the policy, even though it's going to give you a massive net worth right off the bat, it's going to get that uninterrupted compound growth, et cetera. But we're really setting it up to get that, but plus have access to the money to build wealth like we're going to anyway. So a couple examples. So number one is I'm going to be using my policy to do private money lending on real estate in my local area. I'm about to join my local RIA, and I'm getting a really good foundation about how private money lending works. First, obviously, you want to make sure you're educated on whatever it is that you're doing to build wealth. But overall, setting up a dividend-paying whole life insurance policy for any type of real estate is phenomenal for building wealth. It's going to accelerate your ability to build wealth by utilizing the policy. Because here's what happens, guys, is these policies essentially allow us to set up our own banking system. Okay, so if I have a policy, which I do, but if you have a policy, whatever, and you have a real estate deal. So in my case, I'm going to do a private money loan on, I'm going to lend money on this real estate deal. Okay, so I'm going to borrow against my policy at 5.5%, whatever. And I'm going to lend it at 10, 11, 12%, depending on the deal. while I do that, even though I do have an interest cost, my policy is continuing to grow, compound at 3 to 5% every single year while I use that money. And the policy loan is it's a simple interest loan where the interest is being applied to a lower and lower balance. The compound growth in the policy is being applied to a higher and higher balance. So there's a couple of different ways to look at this. Is the growth in the policy can actually cover a lot of the times the interest expenses, right, and still come out way ahead. I did a whole other video on the difference between simple and compound interest. If you want to check it out, I'll link it down below. But then, I've got the 10 to 12% that I made over here. I essentially made money twice. My only expense there was whatever interest I paid to get access to the policy loan. That's it. So if I'm going to flip a piece of real estate or I'm going to lend on it, why wouldn't I want to make money twice while also having all of the incredible benefits that whole life insurance gives us? The living benefits, if I were to get diagnosed with a chronic or terminal illness, I could access a large portion of that death benefit to get whatever alternative care I want, stuff that, insurance doesn't cover. It would give me options, right? And that's peace of mind that you really can't, it's hard to put a price on that. The death benefit, it helps to financially protect my loved ones if something were to happen to me prematurely, right? So we get all these benefits in addition to now we're able to make money twice on some of the things that we're doing to build wealth utilizing our policy. Guys, this is no different than what banks do. So when you make a deposit to the bank, they're going to pay you, let's say 1%. Like when you, a checking account, savings account, et cetera, they're going to turn around and lend that out at 5%. It ends up being like a 350% rate of return after, the profits and expenses and things like that. It's a massive return. But do you hear them complaining that they have to pay you 1% in order to do that? No, it's just a cost of doing business to get all of these other benefits, right? So, another way that I'm using my policy to build wealth is I'm flipping heavy equipment. So very similar to flipping real estate, just without all the other headaches. Not saying not to do that. Flipping real estate is fantastic. I'll probably do some at some point. But I'm flipping equipment right now, like heavy equipment, forklifts and things like that. Very similar to flipping real estate. And I'm able to borrow against my policy to fund that, to finance that deal. And so my policy is going to continue to grow. The average return on these types of deals, 20 to 30%, right? I keep the spread. Like the only cost of doing that was whatever my interest was on the policy loan. That's it. But see, also the other benefit, the other reason that this allows us, or it accelerates our ability to build wealth, is whenever you pay that policy loan back, minus interest, you do not pay yourself interest with this, guys. I want to be very clear on that. I've heard some agents say that. I don't know where that comes from. You don't pay yourself interest. But all the principal immediately shows up in your cash value again, ready to use all over again. So you're recycling the same dollars. You're getting this uninterrupted tax-free compound growth. You got all these other benefits. And it's just like, how on earth could you ever think that these are bad vehicles? Like dividend paying whole life insurance is a bad vehicle to build wealth. When you set it up and you utilize it properly, it's incredible. Now, if you're the type of person that's looking for something to just, put your money in, bury your head in the sand, and then just pray that it works out, kind of like 401ks and stuff like that. Again, not saying not to do a 401k. It's just not for me. Okay. Then maybe that 3 to 5%, maybe you could do better in the stock market. And like I said, if you're not going to utilize the policy properly, it might not be good for you. But if I were to ask you, if there was a savings account at your bank that is going to give you 3 to 5% tax-free compound growth for the rest of your life, and it's going to give you this death benefit, living benefits, you can access it without interrupting that compound growth, is that something you'd be interested in? Well, yeah. I mean, that sounds like an amazing savings account, right? The only difference is that we're talking about life insurance. That's it. So, I hope that helps answer that question a little bit, just give you some perspective. Like when you hear stuff like that, just ask yourself, okay, who am I listening to here? What are they trying to sell me? And then also, compared to what? So dividend paying whole life insurance sucks for building wealth, but compared to what? If you're comparing it to the stock market, well, like I always say, that's comparing apples and tater tots. You're not comparing anything that's comparable right there. They're completely different products in strategies. Like the whole life insurance policy has literally nothing to do with the stock market. Stock market is the stock market. It's you know what you're getting into there, where you're going to have all the volatility, you're going to have ups and downs, you got to be in it for the long run, etc. But they're just not really comparable. So if you're saying like, oh, I can get, like Dave Ramsey says, I can get 12% on average in a mutual fund. I have no idea where you're doing that. But and then you compare that to 3 to 5% in a whole life policy, and you just stop there. Well, yeah, it doesn't sound very good. But when you understand how these things work and how you can use them in your own life with whatever it is that you're trying to utilize to build wealth, now we see it paints a picture of an environment, a situation, a foundation, I guess I could call it, that allows you to accelerate that wealth building process with whatever it is that you're doing. So that's why these are like really popular with real estate investors, business owners, et cetera, because we can use that money, that money is going to continue to grow. Our cash value is going to continue to grow. We're going to put that money to use because we know we can get XYZ rate of return over here. We've made money twice. The only cost of doing business there was the interest. That's it. It's a small price to pay, guys. So anyways, I hope that helps. Would love to hear your feedback. Any questions that you have, drop them down in the comment section below. Check out, I got a bunch of different master classes and courses and stuff for you guys in the description as well if you want to learn more about infinite banking and whole life insurance and all that. So make sure you check it out. Otherwise, I hope you're doing well. Hope you're crushing it. And I will talk to you in the next one. Matty Ice is out. To your success.